Welcome, everyone. My name is Ryan. This is Rob. We're the founders of Vici Trading Solutions. Rob and I have developed these tools, and we wanted to explain to you exactly how they work. So Rob is actually the coder for this stuff, and so I thought it'd be great to have him along so he can explain to us how all this stuff works under the hood. Rob, we are going to discuss dynamic delta first. So let's get right into it. So Rob, I've got this pulled up on the 5-minute chart right now. I want to go down to the tick chart, but let's talk about this right now and exactly how it works, because this, for me, this is one of the more phenomenal tools that you've presented to me. And this was one of the early tools that I really fell in love with, because it gives me the confirmation that I'm looking for on a level that I'm already pretty certain is going to get a reaction anyway. So, I really found this tool extremely valuable. And I'd love for you to explain to people exactly how it works, from a high level perspective here.
Yeah, absolutely. So dynamic delta is something that looks at each tick coming in. So each trade that's coming in, and it doesn't matter if you don't subscribe to tick data. The streaming service will paint it on your charts, regardless if you have tick data or not. And so it's also a real-time indicator. So there's no moving averages or anything like that. This will happen in real time. So as soon as large players come in, either buying or selling, and the speed of the tape picks up and there's larger transaction sizes that's statistically significant,
Nice.
then it will paint for buying, it gives you the blue dots on this 5-minute chart and the orange dots at the highs there for showing you the sellers coming in, trying to send it back down. And you can see that when we get to our levels, we had some great buying coming in there. So if you thought the thing was going to come down a little bit further, like would typically happen when you have a big acceleration like this, you can see where the buyers are stepping in and defending those levels to give you some more confidence to take those trades.
Nice. So Rob, this is, like I said before, this is one of my favorite tools because, for me, our levels are already predefined areas and zones where, we're looking to take trades regardless. And so, for me, when I have a tool like this where I may get in the trade and I may be, fairly confident it's going to work, but I'm a little hesitant. So I'll put on a partial size, right? But when I see something like this fire at my level, I'm more than likely going to add into this, or if I'm not in the trade, get into it because, that's my flash, like, hey, pay attention. And then not only was there one here coming off of this level beautifully as it curled into it, but we had another one here as it's starting to take off. And then I think you brought up earlier how when it got above this high, this was a perfect breakout signal here. And one of the things that really I love about this, and we're going to talk about the tick chart, but as you know, I prefer a higher time frame like the 5-minute if I'm looking at smaller time frame. The thing that I like the best about this is you actually have it firing this dot exactly where it happens at the price in the candle, which I think is phenomenal. So it's no repainting, it's real time, it's great. Yeah, I mean, this is a wonderful tool. Would you say that the way that I'm using this tool would be correct? And when wouldn't you use it? Can you kind of give me an idea of, like, you don't want to just take every single dot that pops
Right. You don't want to take every single dot, because there is a gotcha that can happen here, which is sometimes when price is coming down, you'll actually get some like red balls towards the bottom. And that is sellers that are getting super aggressive, but they're not getting very far. And
Okay.
so if you're at a level where you're seeing lots of aggressive selling, but it's not getting anywhere, it can actually be a counter signal that those people are getting absorbed. And now is a great opportunity to actually take the long, because
Okay.
they're going to get stuck. And so this is one way of seeing that. I think when we get to the tick chart, you'll be able to see that a little bit more clearly.
Sure.
But yeah, that's a great way of showing it.
Yeah, here we go. Here's the tick chart. So one of the cool things, and I want to emphasize this before I have you take back over, Rob, is the fact that, what we saw prior was the dot that was being drawn on the placement of the candle when it fired. And this right here, when you go to the studies, when you come into the settings for this, when you check out the dynamic delta, you can see right here that you can either color the entire bar, and we generally use this for tick charts, okay? Or if you want to place it on a time frame based chart, you could place the delta condition inside the bar. That would be the dot. Okay, so these are the two options that you have for this, and then obviously, if you wanted to, you could change the style or even the color for that matter. But with that being said, I've chosen red and blue because it highlights nice, and I believe this is exactly what Rob was talking about. How these big sellers are essentially getting absorbed or getting stuffed at the lows here. So go ahead, Rob, please.
Exactly. So yeah, we're seeing those sellers that are trying to come in, and during this day, there was a period of balance here, and it was kind of going towards the lower end of balance. And as soon always when the sellers were getting down there, they were pushing, pushing, and just couldn't make it much further, um, until ultimately buyers started to wake up and really press it higher. And some of the best signals that I like out of it is when we go from one state to the next.
Like
So
this
in
here,
here, right, exactly. When we go from heavy selling and absorption to seeing buyers step in.
right?
And even though that didn't take us to new highs, it came down and basically took us to an area where we had one of our levels get aggressive selling, couldn't go, and then the buyers started to step in again. 1538 or whatever, the buyers really started to gain
Yeah.
momentum, and sellers tried to take it back, but were unsuccessful there. You could see right there where it was a great opportunity to get in again.
This is a beautiful play, and you and I, when we first really kind of made this tool, we dialed it in. One of the things that you and I noticed a lot was the way that they'll oftentimes pull back into this heavy dynamic delta buying, and then that's where they'll pick back up again. So it was interesting that they kind of pulled back into the initiation point of this big buying.
Yeah, they never got any lower
Yeah,
than
but they got
the buyer
stuffed. The
stepped
sellers
in.
got stuffed, and boom, it changed. It's just gone. Let's talk about how not to use it, just so that people understand.
Mhm.
And I think even though this is when you want to use it, right? When you have one goes from one extreme to the other. But for me, when I talk about not to use it, like this right here, we don't really know what was here at this point in time. But if I generally do not take this unless I have like a level or an area that I'm looking to use it as confluence. And the reason I say is because I think a lot of times you'll have areas like this where this will fire. And really, what this is these are aggressive buyers who are assuming that price is going to continue to go higher. And if you
Mhm.
just took it every time it fired, you're also the guys that are buying the
You're
high,
buying
right?
late, yes.
Right.
Exactly.
So yeah, and so I would say this thing works very, very well, but you also have to have some sort of process that you're going to involve it with. Would you agree?
Absolutely. I always say, like, our edge is at the edges. You really wanna be at the edge of price action. So if something's sort of, like, in the middle and it's kind of wandering back and forth, oftentimes there'll be heavy absorption because there's a big options level there or something like that. So you
Right.
really want to see these things fire, at the lows or, at the highs tend to be the better places to get in.
So I wanted to talk about. So we've saw multiple examples here about, and we're in an uptrend. So it's we're going to see a lot more seller absorption in our example here than buyer absorption. But here is a great contrast to that about how they pushed up towards the highs, and these buyers were really extending themselves and essentially got trapped up here. And so if we had another level up here or some context that we were saying, okay, this is pretty big resistance, and we saw these buyers fire into the highs like that, and then in the pullback start. I mean, I'm getting short here. This is for me.
Exactly.
This is the opposite of what we're seeing here, right? So this is sellers and this is buyers. I mean, it's guys getting stuffed basically.
Precisely.
All right, so the next one we have is trap traders. Trap traders is gold. And I rely on this is another one that I use quite frequently, but I use it at certain times. Okay. And we're going to go over exactly when I use it. But Rob, this is for me, this has been a huge help and a huge crutch for two reasons. It really shows where the institutional players, these big boys, are getting in and they're getting stuck. Rob, can you enlighten us a little bit exactly how this works and how we should be using it?
This is one of my favorite tools. So similar to how dynamic delta worked when we had a bunch of, say, aggressive buying at the highs or aggressive selling at the lows, and we would get a dot here, get a dot there. This is another way of categorizing if you have a bunch of stuck people that have were late in the game and then price went against them. And the reason this is important is it gives us a nice zone, based on the internal tick data of the bar. And it's real time, so it fires right when these traders are stuck. And what that allows you to do is when we get back to those levels, if a number of those stuck traders will typically unwind or get out of their positions, which then will take us, higher or lower depending on which way they're unwinding. So you're looking for people who are late in the game, have gotten in an extreme when they shouldn't have, and they're looking for any opportunity to get out of their trade. And so it comes back up there, and you'll see usually price will rebound from those levels.
So essentially, these larger players are holding their positions, and then when it comes back to their break even or thereabouts, they're then getting out of their position, which is causing the reverse order, which then gives us the reaction.
Correct, exactly.
Yeah,
And so we just saw that there on this 5 minute chart, how they came back into where those late sellers were trapped. We tagged the level and then took off again right from there.
kind of give us a guideline here. How do you use it?
Yeah, so I use it similar to the dynamic delta, where I tend to look for it at the edges of price action, and I like to look at it confluence of R levels. So it's really helpful if you've got a level that you're questioning or you're wondering a little bit about, and then if you see it's got trapped in it, then it gives it a little bit more confluence that it's a solid level. If it's a level that's sort of inside of a range or sort of bound inside a higher low, then I'll tend to disregard it, because you don't know. Again, it could be an options level, or just a bunch of people were buying or selling near like a point of control or something like that. That doesn't
Okay.
happen frequently, but yeah, again, look for the edges and confluence with structural levels.
Here's how I use it, and this is based on our methodology. And up here, I had an untested 4 hour, 1 hour level, and then right here there was 1,791 trap cars. So for me, I wanted to take this short anyway, and so when I had these trap traders that were there, it gave me one more level of confluence.
And
Essentially,
this
there's
would
a
be the
little
edge. And we also had some trapped at the low there with
You're right.
2,600. And that was also at a 1 hour level that we had. So
You
they
are
went
correct.
down there and then they got trapped from one of
Yep.
our levels. That was great.
Yeah, it's beautiful. Next on the list is absorption. This is a fantastic tool. We've been talking about absorption most of the day. Now we get to see the actual tool that makes it happen. And this is a two-step tool. And I was hoping you could explain to us both steps and how to use them, and if we should wait for both to fire before we do anything.
Yes, I tend to wait for both things to fire before I do anything with this tool. So what it does is it looks for um, very small price areas where there is a lot of either buyers or sellers one direction that aren't getting very far, and those people that are in those prices are sort of oversized. So imagine if you saw a bunch of price levels and they had 10 contracts, and then one had 200 contracts. Well, that price level was showing that you had a bunch of buyers and it was incongruous with everything else. And so you had a level with a lot of buying that was getting absorbed at a certain level. And then what we wait for, and you can see it on the screen here, is the star is the delta flip that happens after that absorption. So you had the absorption, which is the little dot, and then that absorption was confirmed with strong delta flip telling you, okay, these guys got absorbed and now we're going the other direction.
And
And
here
then
it
same
is.
thing here at the low. And I like it when this happens, when it corresponds with one of our levels that we have drawn,
Right.
and it comes down. You have the absorption fire, and oftentimes that's helpful in itself, just knowing that you've got a bunch of sellers at the lows that are getting absorbed. And then you have the delta flip that says, okay, now buyers are stepping in after you had a passive buyer that absorbed all of those sellers.
So Rob, this tool is fantastic. I use it all the time. This combined with Dynamic Delta for me is a tag team duo. Okay, but I do know that it does have its flaws. Can you tell me like the downsides of using this? And I'm just going to throw out trend days. I'm just going to throw the
Yeah.
word out there, right?
Specifically, trend days are the day. If you're in a balance day, I literally will take 100% of these when they fire.
Okay.
I will take them because they usually work out statistically. But on days where you are trending hard, and prices moving, just grinding up higher. Oftentimes in those days, you've got heavy players on both sides of the equation. And so you will get absorption and then the delta flip just enough to trigger it to signal. Those are days you really can't take advantage of this indicator, is on trend days, because you'll get too many big players that will make it look like you're getting a delta flip when you really aren't getting one. And I think we've all traded days like that where you have a bunch of grinding price action, and that is big players getting involved on both sides, and one side just grinding it up and just pushing it higher, and sort of forcing themselves on the market to send it one direction. But on balance days, this works out really well. Now remember that we only get 15 to 20% of the days are trend days, where you'd really have to be worried if this indicator is firing when it shouldn't. Days like this is where this thing shines.
So next on the list is divergence. Rob, we have two kinds of divergence available. We have one for RSI and one for MACD. And I know you got some really cool features built into this, which I'll show people after you get done explaining. You mind giving us the breakdown? And
Sure, absolutely. So I think most people are familiar when they see divergences on, say, an RSI indicator or a MACD indicator, when you get sort of a higher high on the indicator, but a higher low on the price action. And we're coming up with an indicator that's allowed you to demonstrate and show that on the screen without without having to have another subgraph on your chart. And we started out with the RSI, and we had some community feedback that some people like the MACD, but we also included a momentum indicator in this. So it's not just a pure RSI or MACD, because we found when we were doing some testing that we have a statistically significant improvement on these divergences when we see a slowing of momentum on those new lows and things like that. And so by adding that in, it's made this divergence more accurate. And so you can see here at the low, it painted that divergence with that yellow line to show you, okay, here is a place in the price action where price made a new low, but the momentum shifted upwards. So you can see in this example on the screen where we get some painting that it actually covers a fairly good span. So you can see when it even makes a high here, we had that divergence which signaled just before this thing came back down, and then gets to one of our levels, and we have divergence on the low again, and allows it to take us back up. But when you look at how many points that is, it's a pretty significant move. So these divergences have been super helpful and instrumental in catching, or at least help signaling, when we get some turns. I tend to look at these divergences with a little bit of confirmation. I like to see a candle or some shift moving in the direction I want to take the trade, so I don't take them blindly, but they are fairly robust.
so one of the things, Rob, that I wanted to show everybody, and this is a quick example of one of the things you can do with these tools, is when you come over here, and I just have the MACD one on here. The cool part is this is a 5-minute chart, but I currently have the 15-minute divergence being overlaid on the chart. So you can go through here and you can overlay a 4-hour, daily, a 1 hour, or on any time frame. So if you wanted to see a 4-hour divergence on a 15-minute chart, you can see that, and you can have it overlaid onto your chart. Another great feature that you've made over here is that any of the tools that you put on this, you can right click and you can easily hide or unhide things as you go. So the next one on our list is back burner. So this is a strategy that we actually teach in our course, and we had Rob code it up so that it was easy to see visually on your charts. And Rob, take it away. Please explain to us, how we use it.
Yeah, so Backburner is looking at studies that try to tell you if something's sort of similar to an oscillator where something's overbought or oversold. And what we look for is the flip of something being overextended or have gone too far. And I will wait for the next candle for confirmation if it doesn't have any color to pull out one way or the next. So you can see on this chart at the low here, we have red, meaning we've got this oscillator coming down and it is coming in really hot. And then we get the flip where the color goes away, and that signals to us that this indicator is cooked and it's a good time to start looking to buy. We do get a couple other ones intermittent throughout, but I do like to take them at levels where we do have specific edges. You can see on Monday at the end of the day we had a bunch of buying going into the day, and so we really couldn't take advantage of too much of the sell going on because it happened in the last few minutes of the day. That's pretty obvious that this thing
They
was
were
cooked and going really high.
While it's on, you don't want to initiate your trade, right? You want to wait
Right.
until it
You want
comes
to
out
wait.
of its color and then you get in.
And
So at this point, you're cooked and then wait for the blue to turn off. It falls down here. You wait for the red to turn off. It pops. Same here. Is that
Exactly. And it's
okay?
a way of seeing how extended something is. And if I just get like one blue candle or one red candle, I probably don't pay attention to it. But when I get this nice streak of, 4 or 5, then I'm really paying attention because when it does flip, it'll be a big move.
So here's one more beautiful example. You can see how the oscillator was essentially saying it was a little overdone up here. And then as it came out of the color or out of back burner, as we call it, price started to fall. And then I think here was your individual candles that you mentioned that you don't tend to get too excited about. But when we got down in here, we started to get these bigger, longer runs. And especially down in here where they essentially kind of bottomed out. You can see it on the candlesticks. And then this thing turns off and then she just launches. So I thought these were two very nice examples.
Very clear. So this is like a nice quantitative way of saying, a lot of people will look at charts and price action and go, this thing's extended, it can't go any further, and then it keeps going against you. This is a way of kind of keeping yourself out of trouble and then also simultaneously signaling that, hey, we are getting that flip. We are pulling out of this sort of overextended position.
All right, next on the list is reversal point. Rob, this thing has a tendency to catch the highs and lows real nice. Can you explain to us how this thing works and when we should be using it?
Yes, and so this is a great little algorithm that looks at different candlestick patterns and different highs and lows. And based on a statistical edge, it will try to calculate when things should flip or turn. And so you can see we paint, the little blue with the triangle pointing up to say this was a great time to get long, and then the red triangle to go down. And this is another one of those studies that works extremely well when you're in a sort of more balanced day, but during a trend day, it'll tend to swamp the indicator and it'll be waiting for a point to turn and it just keep grinding up. So you won't tend to get the same benefits that you do on a normal or typical day. But this is one of those indicators that I take fairly frequently, especially when it lines up with one of our levels, because they tend to work so well. And they also tend to work well for placing stops. So you can get your place, you can see the turn. It's an area you care about, and it typically won't go, very far against it before rolling over.
So for the next items, we're going to combine three. We're going to talk about intraday lines, bar time counter, and algo V. This is wonderful the way you've already had the previous day's high and low and the open and the close marked already, as well as my favorite, yesterday's point of control. So this, I know, just to make things clear, you have yesterday's value area high and you have yesterday's value area low, as well as yesterday's POC. These are all marked based on the TPO, guys, just to let you know. This is all pulling from a TPO. This is not volume based. As far as I'm concerned, this is magnificent. This right here is the timed bar counter. So it's nice, and it's one of the small things that people take for granted. Actually, Sierra Charts, I do not believe has a standard function to count the time on the bar. I don't think NinjaTrader does either. So I believe Rob had this coded up and put in here, and no matter what chart you stick it on, it's essentially going to count down our time. Is that correct, Rob?
Yes, that's exactly what it does. It just does the bar is full blue when it's a brand new, and it just sort of counts down. And it's a really nice visual way, especially when you're looking across a bunch of different time frames to look and say, oh, when's my 1 hour chart close, or when is the 4 hour going to be closing, or even watching on a tight 5 minute chart, when is that going to close? Because oftentimes I won't take a trade within 3 to 5 minutes of a 1 hour close. And so it's really important to me when a 30 and 1 hour minute
Right.
candle close.
Now, this has been really beneficial, and I think it's neat the way that you have it set up so that even if I'm on NinjaTrader and I overlay this on a 4 hour NinjaTrader chart, it automatically knows that it's a 4 hour and gives you this, it starts the countdown for you.
Really pleasantly surprised by how much I use it. And I consider all three of these studies required for my main charts. If you look at the dashboard of any car, it's got a speedometer on it and a fuel gauge, things like that. And that's what I consider these three studies. The intraday lines will give you a great sort of bearing in terms of where you're at compared to yesterday, as well as understanding where you're at compared to today's open and where you're at compared to value. So I find that exceedingly important. It'll also paint the overnight high and low, which we're recording this when they're fairly tight right now. But yeah, the overnight high and low will paint. And then Algo V is another great study that looks at, believe it or not, the sort of volatility across a bunch of different time frames to tell you if it's blue, then things are trending up across these different time frames, and red will be trending down on that time frame. And then these levels that we have are based on statistically significant volatility zones. And then the number you can see on the right hand side where it says 9.75 lets us know that we're 9.75 of a point from our 5 minute level. So it's a nice way of looking at it. You can just glance and go, oh, look, we're trending up across all time frames, and we're fairly close to one of our 5 minute levels that might give us some reaction.
Where we're at right now, right? This market just opened. Our 5 minute support level based on Algo V is 52.30. Let me just draw 52.30 here. What's interesting is for me, I mean, this is the support in this valley. We can see this left shoulder. Not only that, but we have yesterday's
This is
POC
point of
right
control.
here.
Yeah,
Yeah, so
exactly.
it's more about, again, confluence, right? I'm not taking any of these things solely on their own. However, when you combine many of the tools together along with a sound process, you get some pretty significant confluence here. And so, I use these as well. And I just wanted to point out exactly how that 30 just happened to match up with yesterday's POC, which we know is value from yesterday, which has still been untouched today. So if we pull back down in there, there's a good chance that area will play. I think these lines speak for themselves, but I can easily say, and I don't know about you, but I can easily say for certain that I can come over here with a bare naked chart like this one and add them on here and have some predefined structure before I do anything. It's very nice.
Exactly. And you're not having to redraw them from the prior day. You know exactly where they're at. And you can take a blank chart and just fire up the one study, and it adds all the lines and levels from a daily chart, an ETH chart, because we have settlement on there, as well as the TPO chart.
So this is the set of options that you have available for people. So we got overnight high and low, the open, the current day's open, and then all the yesterday's levels, and including the sell. Now you guys can go in here, you can change the color, you can change the style, you can change whatever you want for either Sierra or Ninja. It's totally customizable. And once again, just like everything else, you right click and it goes away. I just find it amazing the way you just you click it on and immediately I could essentially trade off of this. It gives me structure to work with. So it's really that simple. It's really that easy just to turn it on and go. I hope that explains everything for you guys. And Rob, thank you so much for helping me describe this to everyone. I really appreciate
Thank you
the
for
help.
having me.
See you guys out there. If you have any questions, please shoot us an email support ticket. Cheers.